Contrary to projections, UK house prices displayed unexpected strength in 2023, driven by a scarcity of available properties offsetting elevated mortgage rates, according to Halifax, a leading lender. On Friday, Halifax reported that the average house price surged to a 9-month high in December, marking the third consecutive monthly increase and a 1.87% uptick from the end of 2022. This performance slightly outpaced the 1.08% annual drop reported by Nationwide Building Society just last week. The figures, jointly presented by Britain's leading mortgage lenders, underscore the property market's unexpected strength. At the beginning of the year, economists were anticipating a decline of 10% or more, yet prices essentially stabilized. Most analysts attribute this to a mortgage rate-driven price war among lenders, bolstering demand from buyers. The growth we have seen is likely being driven by a shortage of properties on the market rather than the strength of buyer demand. That said, with mortgage rates continuing to ease, we may see an increase in confidence from buyers over the coming months, noted Kim Kinnaird, director at Halifax Mortgages. Halifax maintains its outlook for a 2% to 4% decline in prices this year, while Nationwide predicts stagnation or a 2% drop. Overall, prices have descended 4.5% from their peak by Nationwide's measure and 2% according to Halifax. Buyers and sellers are expected to exercise caution due to sluggish economic growth, coupled with the anticipation that interest rates will remain elevated as long as inflation exceeds the Bank of England's target. However, some optimism persists as wage growth begins to outpace inflation and mortgage rates cool. A recent survey of purchasing managers indicated that output in the construction industry fell at the slowest pace since August, suggesting a potential turnaround in the house building sector. Despite positive indicators, a significant challenge facing the housing market is the impending scale of mortgage refinancing. Approximately 1.5 million borrowers face an additional PSE 1-800 annual bill on average this year as fixed-rate deals expire, according to the Resolution Foundation. Imogen Patterson, economist at Capital Economics, noted, given further recent falls in mortgage rates, house prices are on track to rise in the first quarter. She anticipates the nationwide house price index to catch up with the larger jump in the Halifax data in the coming months. A recent mortgage rate war, triggered by market expectations of interest rate cuts by the Bank of England, has seen several lenders slashing rates. Markets currently lean towards a potential first cut in May, followed by at least 4 more by the year's end. The easing of mortgage rates from the 15-year high reached last summer is enticing more buyers into the market, providing support for prices. The average 2-year fixed mortgage rate, according to Moneyfacts, has fallen to 5.87%, well below the nearly 6.9% peak observed in July. Bank of England data revealed a higher-than-forecast jump in mortgage approvals in November. Martin Beck, chief economic advisor to the IY item, suggested a shift in the monetary policy outlook, rendering the key headwind to the housing market less significant than anticipated. The group now foresees 2024 as a year of stability in house prices rather than a decline. While London maintained the highest average house price across regions, prices in the capital experienced a 2.3% decline over the year. Northern Ireland emerged as the strongest performing region in 2023, witnessing a 4.1% increase. Scotland, the northwest of England, and Yorkshire also recorded gains, whereas the southeast faced a decline. The region surrounding the capital saw the most significant slump in prices at 4.5%.